Welcome investors. I've created a video today to emphasize the importance of a massive bull run which is currently underway since few years, and it's become even more pronounced in 2020 with the massive shift from physical to the remote and the virtual world. And that is nothing but driven by the digital bull market. And I have coined this as digital 2K20. Why? Because it pretty much resembles the 95 to 2000 dot-com bull market that happened, which ended in a bubble, and this will also end in a bubble, but we are not yet there. Bull markets rarely happen. It happens once in 10 years, once in a decade, or more than that. And it can change one's future, one's wealth equation if we really participate and invest in the right stocks. So here is another bull market which is going on, driven mainly by digital. And at the core of it is a main segment, which is very important to understand, that is driven by cloud. The shift to cloud is imminent and it's going on, and we barely scratch the surface according to many of the industry reports and even the industry leaders like Andy Jassy and Satya Nadella. So the cloud bull market is on its way and it can go for another few years. The market might have priced in some amount of earnings ahead, but still there is some more earnings left out, which one needs to participate. And I have created this report primarily for common investors who find it difficult, who are non-tech savvy, who find it difficult to understand, comprehend, and analyze the cloud stocks. I've created a video report to show how you can do that too. Let's take a look. And here is the presentation that I have created, the biggest bull market in history driven by cloud and how to participate. So before we get into the further slides, a small disclaimer. If there are any companies that you come across or stocks that you come across in this discussion, those are just for analysis purpose and illustrative purpose and cannot be taken as recommendations. Please do your diligence before investing in stocks. So now moving on to the next slide, which is primarily, that picture says it all, right? This slide is crowded for a reason, and there is the whole real estate is blocked on this slide. It's because of the jargons that's present. It's like when we hear about cloud, it's a scary jargon that follows, and all the terms that are associated with the cloud sound so confusing. Even when I heard the first few times, it was, I used to doze off. Most people do that when we hear the word cloud, and when we hear the jargons in and around that. It's a perceived black box for most of the technology folks, including people who are working in the technology industry, for most of them. And maybe they are aware of the basics, but when we go down, there are whole slew of terms that will come across industries, which might be really overwhelming for normal people. Normal people might feel it like, too difficult to comprehend. Now, it is, the illustrative, the figure shows it all. So you have the terms like, starting with IaaS, SaaS, PaaS. Then you have the hybrid, private cloud, public cloud. These are the type of clouds in the infrastructure. Then there is DevOps, automation. Then there is OpenShift, Kubernetes. That's more of the PaaS and cloud native. And then there are hyperscale cloud providers. Hyperscale is another new terminology that's catching up. Then there are all sort of analytics, data centered, cloud operations. Then there are edge computing, which is also fast catching up, and the smart buildings, smart IoT, Internet of Technologies. Then here there are terms like, security itself is a broad classification in cloud. You have app security, cyber security, workload security, network security, identity access management, conformity, file storage security. So, and there it doesn't stop. These are the cloud fundamentals. And then there are different industries like, cloud for healthcare, diagnostics, life sciences, and a lot of terms in and around the CRM associated with the cloud, healthcare, and financial industries. So how do one, if one is not in the technology industry, it's very difficult to participate in this cloud market, especially to identify cloud stocks and participate in this. And there is this book, Behind the Cloud, written by Mark Benioff. It's a fantastic book. This was written in, I think, 2009, published in that time. Mark Benioff is, as we know, the founder of Salesforce.com. Salesforce is, as we all know, it was founded in the end of .com, and it could be the only countable survivors from 2001 .com burst. And Salesforce, I would say, is the first cloud innovator, and that revolutionized the whole cloud industry. So this came in 2001 too, where Mark Benioff had this vision of creating and providing software and platform services over the internet, and there gave birth to the concept of cloud, which revolutionized this whole industry. And you can see in this slide, I have taken an excerpt from this book. I was rereading when I was preparing this analysis, and I found this very interesting excerpt I put in here, which is marked here. So when Salesforce.com was set out to build this new technology model, which is on demand, delivered over the internet. That's the cloud computing now. It's a new sales model which is subscription based. Look at this. I mean, this was written 10 11 years back, and even this had the direct verbiages from Mark Benioff, and he has used the terms like subscription based and very early in the life cycle, much ahead of the curve. And then 10 years later they had succeeded in all these fronts, subscription based, we have this on demand, everything. So this was the vision they had in 2001 too, and this is written in 2009-10, that is 10 years later when we're talking about at that point of time. And they could achieve all of them with the vision, and they created the first billion-dollar cloud company. This was in 2009, and even at that point of time spawning a new $46 billion industry. So cloud was in a formative stage at that time, even in 2009-10, and it was like just $46 billion industry, and Salesforce was a market leader. Even Amazon, IaaS, AWS, the whole services based cloud was in the formative stage in starting 2006-7. So from that point of time, look at the way the lineage has moved. From it has grown six times, from $46 billion all the way. This is 2020, and this is currently the total addressable market of cloud is estimated at $266 billion by Grandview Research. This is a beautiful research one needs to read, written by Grandview. They publish research in across these segments, across the businesses. So Grandview Research has published this and cloud report, which I have put the source here and excerpt from that. So US, this is just for US. The US cloud computing market is currently at $266 billion, and it's estimated to grow at 14.9. That's 15% CAGR approximately from 2020 this year all the way to 2027. So the next 7 years, it's at a CAGR of 15%, which means that it could go up three times approximately from the current point. So the market is estimated to touch $750 billion just in US, by the by, and the global could be more than or double of this size. It could be $1.5 trillion. The reason I'm saying is that because across Europe and China and Latam, primarily these are the main cloud target markets. The next segment, next wave of growth. China is not there at all in cloud. I mean, they just have Alibaba and Tencent, the two main players, just started. And there are not many SaaS providers in China, not many PaaS models in China. There is only infrastructure as service, which is provided by Alibaba and Tencent, and to some extent, some gaming things in the cloud by Tencent. So this is just scratching the surface when, as I said in the introduction, if you see globally, but in US, it's like, half the way through, we can say, or one third of the way through. Now, factors that are driving this, according to Grandview Research, this is the words I've taken exactly from there. The growing digital transformation across industries, rising penetration of internet and mobile devices across the world, and increasing consumption of data, that is big data, primary drivers of fostering or bolstering the growth. The development of next generation industrial solutions will be cloud enhanced and requires cloud platform to showcase the digital business capabilities. So the rise in adoptions of 4 to 5 main technologies they have called out. That's like Internet of Things, IoT, edge computing, which already has started playing 5G, which is fast gonna catch in the next 5 years. Real-time analytics enabled by artificial intelligence and machine learning is gonna boost these utility of computing, cloud computing technology across enterprises. So that's beautiful research one needs to review. And you can see also like there's another brilliant research done by Gartner, which we will go through in this. So here is the heading. You don't want to miss this digital 2K20 bull market, especially cloud oriented transformation. Now look at the growth, even more pronounced during the remote connectivity and digital economy shift. So there is Andy Jassy, the head of cloud for AWS. This was in 2019, just 1 year back when he presented. And he says that total IT spend across enterprises is just 3% is allocated to cloud, and remaining 97% is still spent on premises. 2020 could have seen a lot of shift from that aspect. It could have moved up a lot in terms of the cloud spending by companies, and that could have gone from 3% to maybe 6-7%. We don't know, but this is the total IT spent globally. And you can see the worldwide public cloud service revenue forecast in $1 billion. This is the research done by Gartner. I've taken it from there. You could see the different segments. The cloud business process services, BPaaS, that's estimated to be at $61 billion from 53 currently. PaaS, which is a cloud application infrastructure services, is estimated to grow. They are combined infra and PaaS. So, the PaaS itself, platform as a service, rather, that should be, is estimated to be at 31.8 billion, and that's almost 50% growth the next 2 years. And SaaS, the software as service, this is a big segment, large basket. There are so many stocks and companies in this. It's estimated to grow up around 40% next 2 years. The security services and cloud management is going to go from 14 to 18, and then IaaS, that is infrastructure, is going to grow from 49 to 76, which will be the fastest in the segment, I think. Now the total market is going to go from $250 billion to 331 in by next 2 years. And if you extrapolate this based on Grandview research, it is going to double from this point almost, so or more than double. Now, so this is what Andy Jassy said. We are still at the what I think of is the early stages of the meat of enterprise and public sector cloud adoption in US. This is just in US, and now think about the global expansion. Outside of the US, they are about 12 to 36 months behind. Uh, that's way too behind, and depending on the industry or country. So we are still at the beginning of this titanic shift to the cloud. So that is quote unquote from Andy Jassy in the reinvent AWS reinvent segment. And so that shows the potential ahead for the cloud bull market. Now, how do we participate in this tectonic shift from, driving the bull markets in Nasdaq index? So Nasdaq is at all-time high. It had the fastest recovery even from COVID-19 drop. So how do one recover from this massive tectonic? How do one benefit from this massive tectonic shift and cloud market? For normal investors, who find it evasive to understand the cloud and tech aspects, it's a good idea to invest in a basket of in index funds or ETFs, which represents a basket of cloud computing related stocks that includes data center, infrastructure, platform, security, networking, edge computing, and all of that. So across domains as well. Even if somebody understands cloud, they do not understand across all the domains. And especially, I would say, like, not all domains have moved to cloud, by the way. So healthcare and life sciences have just started, and financial world is way too behind due to the security constraints. So this still getting discovered, and not many dedicated cloud ETFs. So this is what surprised me. I mean, I was searching for the best cloud ETFs and do some analysis, because I usually pick stocks and cloud, and I was surprised to see there are not many cloud-based indexes yet. I mean, ETFs yet. And then it could be still in the discovery phase that we can expect a lot more ETFs to come. And there are 3 to 4 I could see. The 3 based out of US and 1 for China based, and I couldn't see any other cloud based ETFs. Maybe something in Europe will be there. Now, the three I'm talking about is Wisdom Tree Cloud Computing Fund. The ticker symbol is WCLE. There are three main holdings I've put for each of them. So the main holdings are Fastly, which is an edge computing stock representing 3% of their portfolio. Zscaler, which is a security related stock for cloud, that's around 2.88%. That's endpoint security. Then there is Zoom. We all know, not a cloud play directly, but indirect. But we they got a lot benefited by the recent COVID-19 lockdown and all. So they have been up 150% this year. That's 2.8% in their portfolio. So the performance has been stellar. You could see that they have returned 36.36% YTD just in 2020. It's a new fund. They're not existing since a year even. So you can imagine, and that's why I'm saying it's just the industry is just discovering these cloud stocks, but the valuations still look high from current earnings perspective. But we need to extrapolate the future earnings. And the next fund is Global X Cloud Computing ETF, which is CLOU. That's a ticker symbol. Three main holdings: Twilio 6%. That's a big allocation. Zscaler 5%, and Zoom around 4.5%. So this is a more concentrated portfolio, and they have been there since a year now. Not see 3 year is not existing, so they have returned 30 percentage, and the YTD return is 25.9, 26%. Pretty good returns again. Now you can see the third fund, which is First Trust Cloud Computing ETF. I mean, I think this could be the one of the first cloud computing dedicated ETF, because they are existing since 3 years, and the 3 years CAGR return is 21.25%. But their performance over 1 year is 24%, which is still good. YTD is the least among all, that is 17.23%. And so their main three holdings are Amazon 4.45 percentage, VMware, which hasn't returned well. It is not a great compounder. It hasn't returned. Stock returns has been very meager for VMware. They are around 4.45 percentage, and MongoDB 4.36 percentage, which is the database, NoSQL based database, document based database, that is giving a threat to the whole existence of the relational databases that is there. And we'll be coming up with a different video on MongoDB specifically. That's the future of database, and they are 4.36 percentage. It's a fairly large cap fund, I would say. That's why probably returns have been not much. I mean, as against the other two funds, which are very small to medium sized companies, that's there. And I searched for globally how to benefit from China, because the next largest economy has barely touched the cloud. I mean, we just have Alibaba and Tencent as the two major infra and PaaS providers, but they don't have much of the platforms like CRMs or anything. They don't have any of the functionalities led, business processes led, or software for security led. These kind of cloud providers are not there in China yet. They just starting. But I still figured out there is a fund in China, fund which is China based for cloud computing, especially. It's called Global X China Cloud Computing ETF, listed in Hong Kong. It's Mirai Asset, I believe, who's owners, and its the ticker symbol is 9826. They have two main stocks, which is Yonyu Network Technology. It was more of a software provider and a networking company, and they have also Maitung Dianping, which is again not a direct cloud play. It is a logistics. I mean, it is a food delivery services. However, I thought I'll bring this up for people who are outside US who wants to invest in a China-based ETF or Hong Kong exchange, through the Hong Kong exchange. So they have returned stellar as well. I mean, 33% YTD return, and that's pretty good. So these are the four cloud ETFs I could see. If somebody wants to still play Chinese-based transformation because it's way ahead, one could look at Alibaba and Tencent as well, because those are the only providers of cloud. Alibaba, by the by, has already become the fourth largest cloud provider infrastructure wise. So that brings to the end of this session, and hope this was helpful. And thanks for staying with me.